Welcome to Informed Investor. As we close out another financial year, all major IT giants have released their Q4 earnings, and honestly, the picture looks slightly concerning. Most of these tech giants have provided forward-looking revenue guidance in the modest range of 0 to 5%, reflecting persistent global economic uncertainties. Today, let's talk about HCL Tech, which just announced its Q4 FY25 results that were largely in line with market estimates. The markets responded positively, with the shares rallying 7% after the results announcement, significantly boosting investor sentiment. Let's deep dive into what's happening. Before jumping into HCL's specific numbers, it's worth understanding what's been happening with the IT sector in general. The industry has been navigating some choppy waters lately. Firstly, the Indian IT industry has been grappling with significant challenges stemming from international economic uncertainties. Tariff-related concerns have been at the forefront, particularly following Federal Reserve Chair Jerome Powell's recent commentary. Powell has warned that escalating trade tensions could potentially spur inflation and emphasized that the central bank isn't rushing to reduce interest rates. This cautious stance has profound implications for the IT industry. The Fed's interest rate policy directly affects numerous IT stocks with high exposure to the US markets. When rates remain elevated, client companies often reduce discretionary spending on IT-related projects, impacting revenue streams for Indian IT companies. This creates a challenging environment where securing new deals becomes increasingly competitive. Now, ever since Trump took position as the president, he has created chaos on the global stage with his tariff announcements. And now recently, Trump being his unpredictable self, is now indicating he may scale back some of the tariffs imposed on China during his earlier term. This has sparked hopes of easing trade tensions between the world's two largest economies, an outcome that could benefit export-driven sectors like the Indian IT sector. The Nifty IT index has underperformed sharply, falling around 16% over the past 6 months, while Nifty 50 has been flat in the same period. The sector's weight in the Nifty 50 has dropped to a 17-year low of 10.2%, highlighting investor caution and concerns about revenue stagnation and delayed deal renewals. Now let's look at what HCL Tech delivered this quarter. The company reported revenue of 30,246 crore for Q4 of FY25, marking a solid 6.1% increase year over year compared to the 28,499 crore in the same period last year. On the profitability front, the company posted a net profit of 4,307 crore, representing an impressive 8.05% growth compared to the same period last year. The EBITDA margin stood at a healthy 18%. For the full fiscal year 2025, HCL Tech delivered a revenue growth of 4.7% in constant currency terms, successfully meeting their annual guidance. Revenues have grown at a CAGR of 8.9% over the last 4 years. The company maintained a healthy EBIT margin of 18.3% for the year, demonstrating their ability to manage costs effectively while navigating market volatility. Net profit for the full year grew 7.6% compared to the last year. Now, in terms of segment-wise revenue, the services business, which forms the backbone of HCL Tech's operations, grew by 0.7% quarter-on-quarter in constant currency terms, a modest but positive figure considering the current market dynamics. Meanwhile, HCL Software witnessed a decline of 12.9% during the quarter. Now, one of the most promising aspects of the results was the company's new bookings, which reached an impressive $3 billion this quarter. This robust deal flow was catalyzed by HCL's AI propositions and the integrated go-to-market organization that was established at the beginning of the fiscal year. Moreover, in a move that will please shareholders, the board of directors have declared an interim dividend of 18 rupees per equity share, with the record date set at April 28, 2025. This brings the total dividend for FY25 to rupees 60 per share, representing 93.5% of the earnings per share, a substantial return to investors during these uncertain times. Lastly, let's look at the geographical revenue breakdown. On the geographical front, the United States remains HCL Tech's largest market, deriving 63.9% of its revenues, though the company continues to expand its global footprint with a notable increase in revenues from the rest of the world. Commenting on the performance, C. Vijay Kumar, CEO and MD of HCL Tech, provided an optimistic yet cautious outlook. He stated, "The strength of our execution positions us well to capture medium-term opportunities emerging from global uncertainties, even as we navigate the short term with caution." Looking ahead for fiscal year 26, HCL Tech has provided revenue growth guidance in the range of 2 to 5% in constant currency terms, with similar outlook projected for its services segment. Additionally, they mentioned EBIT margin to be around the 18 to 19% band. This guidance reflects a balanced approach, acknowledging both the ongoing challenges in the global economy and the company's confidence in its ability to execute effectively. Now, with four major Indian IT firms, TCS, Infosys, Wipro, and now HCL Tech having announced their Q4 results, we're getting a clearer picture of the industry landscape. Each company has faced similar headwinds, but with varying degrees of success in navigating them. Here's a quick comparison of the Q4 results and the fiscal year 26 revenue guidance from the top four IT firms. TCS delivered 5.3% growth and maintained strong margins, but did not provide explicit revenue guidance for FY26, signaling caution. Infosys saw a sharp profit decline and issued the most conservative guidance of 0 to 3%. HCL Tech managed to grow faster than peers for the second straight year and gave a slightly more optimistic guidance, 2 to 5%. Wipro posted a big profit jump due to cost control, but revenue growth was tepid and guidance is in for a sequential decline in Q1 of FY26. Now, what can we make out of all of this? All four major IT firms are signaling a cautious FY26 with revenue growth guidance mostly in the range of 0 to 5%. Persistent global macro headwinds, especially in the US and Europe, are weighing on client budgets and delaying large deals. Despite the challenges, deal pipelines are healthy, especially in digital and AI-led services. The sector is likely to remain range-bound in the near to medium term. Investors should adopt a wait-and-watch approach for Q1 and Q2 of FY26, looking for signs of recovery in the Western markets and stabilization in client spending. So, the bottom line, HCL Tech's Q4 FY25 results were solid and in line with expectations, but the broader environment remains challenging. The entire Indian IT sector is a holding pattern, waiting for global economic clouds to clear. For now, caution is the name of the game. Now, moving on to some other important market updates. Gold prices in India crossed the 1 lakh mark on Tuesday, driven by record global highs. The surge follows growing US-China trade tensions, a weakening dollar, and the uncertainty over US Fed's policy. Investors are turning to gold as a safe haven asset amid global market jitters. Silver prices also edged up in early trade. Next, Alphabet plans to move some Pixel production from Vietnam to India to avoid potential US tariffs. Talks with Dixon Technologies and Foxconn are underway. The shift focused on US-bound devices is part of a broader effort to reduce supply chain risks. Alphabet also aims to localize key components as India emerges as a stronger export base for tech goods. Next, Adani Group is exiting the telecom sector, selling 400 MHz of 26 GHz 5G spectrum to Bharti Airtel. The deal covers 6 key circles and boosts Airtel's 5G strength. Adani's telecom ambitions end just 2 years after its 5G entry. AU Small Finance Bank's FY25 net profit surged 37% to 2,106 crore. Q4 profit rose 36% to 503 crore. The bank's income grew 49% with a 51% rise in interest income. A 1 rupee share dividend was recommended. Lastly, Waaree Energies reported a 34% rise in Q4 net profit to 619 crore compared to the 461 crore recorded last year. Over the past 5 days, the stock has rallied by a massive 25%. The company also reported 83% growth in net profit for Waaree Renewable Technologies. Now, having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.